And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show. Over the next hour, we unfold your map to financial freedom. You'll learn how to retire through investing in single-family and multifamily real estate. You'll learn how to create cash flow and build wealth so you can have the time and money to live the lifestyle you want.
Hello and welcome to the show. This is Andy Webb with Lifestyles Unlimited, and as always, we're working on your financial freedom. And if you caught last week's show, you probably heard me say I'm out and about in the RV bunker. I do have the mobile radio studio with me. I'm still in that RV bunker. We're at about, my wife and my son and I, about 2.5 weeks on the road now. Now, we've ambled. We were near New Orleans. We've now ambled a little bit farther east. Spent a little bit of time in the panhandle of Florida, but now we're currently on the banks of the Suwannee River in northern Florida. It's a great little state park, a gem. Never been here before, just looking in the area. What's roughly within a 3 or 4 hour driving range from our last stop, and great little park. Very long name. It's called Stephen Foster Folk Culture Center State Park. Sounds a little odd, but truly a beautiful place. Easy to bike, kayak, canoe. Yeah, there are some cultural aspects. A museum dedicated to said Stephen Foster, whoever that is. We'll talk about that. Lots of cultural events, it seems, but the nature is stunning with the river. I'm just looking out my window here now. Old live oaks with carpets of Spanish moss just dangling down. It's amazing. You might even, if you listen closely, there's a bush right by my window here. You might catch a few birds of Twitter out there. Just phenomenal. So we're in Stephen Foster State Park. And one of the reasons I love traveling like this with my son is he and I, we're learning. We're learning a ton together. We're having great experiences. And we've been learning a lot about this guy, Stephen Foster. And I'll be honest, I did not know who he was. Now, it does turn out, I sure did know a lot of his songs. So who is this guy? You may know. I didn't. He lived a while ago, very brief life, died at 37. Born in 1826, lived till 1864, so easily 150 years ago and some change. But he was a very prolific composer, around 200 or so songs. In fact, he was dubbed the father of American music very early on. You might recognize, for example, Oh, Susanna. My son has a little keyboard that'll play music for him. I hear that song all the time prior to coming here. Oh, Susanna, Don't You Cry for Me. You know that one. In fact, he penned the state song of Kentucky as it is now, My Old Kentucky Home. He penned the state song of the state I sit in right now, Florida. Old folks at home, you might know that as Suwannee River. Way down upon the Suwannee River. Never thought I'd sing on radio, but there you have it. And of course, if you grew up like I did, watching Bugs Bunny and Looney Tunes, Foghorn Leghorn, he always did, what was the song? Camptown Races, doo-dah, doo-dah, all kinds of goodies out there. But that's where we are. Now, you're out there listening to me and saying, okay, great, glad you're having a good trip, glad you're learning, but what does this have to do with real estate or with retirement? Because that's what we talk about typically, right? Getting to retirement, getting to financial freedom, becoming real estate retired through real estate investments. Well, here's the interesting part. And if I go back to where we were just a handful of days ago, in the Panhandle, our last stop, I learned there is not just one Stephen Foster State Park. About an hour up the road from us, or up the Suwannee River, as it were, in Georgia, in the middle of the Okefenokee Swamp, you will find Stephen C. Foster State Park. 2 parks, same name. Now, on our stay before coming here, we met a great couple. They had several kids. Their kids, our son, they played together for days and days, biked everywhere. So we're hanging out by the fire talking about, as it were, Stephen Foster State Park. They knew it too. They had all kinds of recommendations for us. Hey, be sure to take the swamp tour. This thing's great about it. That thing's great about it. But they're from Georgia. They're not talking about the one where I am. What would have happened if I asked them for directions from Freeport, Florida, where we were, to Stephen Foster State Park? They would have been happy to oblige. They would have been happy to share and tell us where to go. They would have given us the interstates, the state highways, etc. That would have taken me into Georgia, into the Okefenokee Swamp, and right to the wrong place. Best of intentions, helpful. They would have told me the way, but again, as it turns out, they're coming from a different perspective, a different point of view, with Georgia on their mind. So the destination is wrong. And I figured this out, quite frankly, when I put Stephen Foster State Park into my map app, and it tried to send me to Georgia. So user error on my part. And then I figured out we were talking about two totally different things. Are you sure you've been given the right one? The right map to retirement? Where did you get it? What does it look like? When does it get you there to retirement? Are you going to make it there? A lot of Americans don't. And the problem is we do follow that conventional wisdom path because we listen. Look, our parents, they have the best intentions for us. Everybody around us, for the most part, do. And they give us advice and they try to help us, but they have the wrong map. They're following that conventional wisdom path. And you've heard us say this before. What does that path look like? You go to elementary school, you go to high school, you get good grades. Maybe you do that accelerated class, right? Get into the advanced stuff if you can. Get good grades so you can get into that college. Maybe do some sports, right? Do good things in college so you can get that great job when you get out. And then you work for a decade and another decade after that and another decade after that and another decade after that. I mean, it really keeps going. And all the while you save and you save and you save because that is the conventional wisdom route to retirement. Saving. Now, these days, we use that, what I just mentioned a moment ago, that defined contribution plan. That's that 401k. Maybe you use an IRA, some sort of other retirement accounts. Typically, people have multiple. But these are effectively glorified savings accounts that in the end will not get you there. If you just look at the savings rate in America, we know it's not good. It's typically very, very bad. Now, it did improve. It was remarkable. About 2 years ago, it started to go up. It started to improve. Why was that? Did we all change something in our collective thinking? No, Uncle Sam started throwing money at us as part of the COVID stimulus packages. And we saved that. And the rate actually got better. And what has it done since then? It has fallen back into the basement. It is absolutely abysmal. And it's getting worse. It is declining. And the fact is, you cannot save your way to retirement. Some people can. All right. I should say there are always outliers, but if you look at it as a bell curve, you're going to have those people that are way out to the right and they're doing great. Those 401k millionaires. How many of those are there? Not as many as you might think. The bulk of you are going to be in the middle, trying to save your way there. And even if you think you've arrived, I think I have enough. You know, I see if you go on, I don't know, some of the finance sites out there, forums, that sort of thing, you'll see these questions. I've saved $300,000 in my IRA, and I've got this much equity in my house, and I'm X years old. Can I retire? I've got $150,000 in my 401k. I own my house outright, and I'm Y numbers of years old. Can I retire? I see these questions all over the place, and people are very focused on that mound of cash, that pile of gold that they've saved. But here's the problem. You get there and then you start to have this fear. And that fear is essentially behind those questions. Am I going to be able to retire? Am I going to be able to now live off of that pile of gold? Or will I deplete it? Could I very well possibly outlive my savings if I retire right now with what I've got? That's called longevity risk. The risk that your lifespan will actually go on the long side. Right? Again, thinking about the bell curve, maybe it's out on that tail end. Good for you. Unless you didn't amass a big enough pile of gold or cash or savings or 401k accounts, whatever it is. But again, we know as a whole across our society here in America that we aren't saving enough. I occasionally see some big numbers in those questions I see out there. I've got $1 million saved. Hey, good for you. Is $1 million even enough these days? What's your burn rate? How quickly are you going to run out of runway? Even with $1 million, even $2 million. There's a better way. Look, there is an alternative. And I, as a member at Lifestyles Unlimited, somebody that has been investing in residential rental real estate for over a decade now, I recognize that fact. Now, I didn't figure this out on my own. I had help. I had mentors. I had a team around me. And they helped me become real estate retired. That is our alternative, is to invest in alternative assets. And I don't mean gold, and I don't mean silver, and I don't mean Bitcoin, and I don't mean some sort of lithium mine somewhere across the world. I'm talking about real estate locally here in the United States, because we know everybody wants a place to live. We need air. We need water to drink, right? We need shelter. And as real estate investors, we provide that. Now, this alternative, I asked the question a moment ago, if you look at your retirement roadmap that you're holding right now, what is your destination and how far out in the future is it? When will you be able to retire? Typically, we're following what Uncle Sam tells us. Early retirement, 62. Nowadays, for me, it's 67 in a couple of months. Will it be older for those that are coming behind me, the millennials, Generation Z? I don't know. There's always a little bit of risk because, again, we are seeing greater longevity. Generally, there's a greater risk that they're going to pull that even backwards, even higher, older for you. What about us when we go down that alternative path? How and how soon? Well, we talk about it all the time, and we have guests on this program all the time. Retire in 5 years or less. I have people on that do it even quicker. But how are we doing it? How is it that we're becoming real estate retired? So if this is the alternative asset class that will get us there, why real estate? What is it we're buying? Commercial? Retail? Do an Airbnb? No, none of that. RV parks? No, yeah, I like to visit those. I'm glad there are people out there that do invest in those. I prefer state parks. They're a little bit gentler on my pocketbook, but we're at a beautiful, beautiful RV resort, no less, on the Panhandle Coast before this. So I love those people that certainly invest in that stuff. We've done our share of staying in Airbnbs, but we don't do any of that. We keep it very simple. We're buying residential rental real estate. And here I'm talking about single-family houses, maybe duplexes, maybe triplexes, maybe quads, and multifamily apartments. Because again, people need a place to live. If push comes to shove and I need to retire the RV bunker, I'm not going to go stay in an RV park. I downsize, get back into my sticks and bricks house. I will want a place to live, a fixed place over my head. And everybody out there across the nation does as well. So that's why this is an asset class far outseeds those other real estate types. Now stick around, we'll talk a little bit more about this when we get back.
Got questions? Call Lifestyles Unlimited at 855-497-4335. The Real Estate Investor Radio Show continues next.
You can't be financially free if you're psychologically imprisoned by disabling belief systems.
Are you ready to break free from your disabling belief systems about money, real estate, retirement, and financial freedom? Then join us for Lifestyles Unlimited's live online free workshop. Learn the belief system that thousands of people like you have used to break free from corporate America and create the lives they have always wanted. Register at lifestylesunlimitedfreeworkshop.com.
Creating the lifestyle you've always wanted. You're hearing Lifestyles Unlimited's Real Estate Investor Radio Show.
Welcome back to the show. I'm your host, Andy Webb. I thank you for joining me today. If you have any questions, you can email me to askandy@luinc.com. Now, I have gotten a number of emails from you, from the listeners, over the past couple of weeks. I'm going to bring some of those up on next week's show, so be sure to tune in. We're going to finish our conversation today about why real estate, and I really want to tell you about some of our star realtors that we have on the team. You're going to understand how these guys can help you do the things that we talk about on this program, at our case studies, at our multifamily and our single-family road trips. I mean, I'm talking about absolute stars that we have on our team. We're going to get to that maybe in the last segment, but keep that in mind. And I want to tell you next week as well, just to kind of wet your whistle, I want to tell you a little bit about my progression. And I want to talk a little bit about sourcing houses, because we've done a lot of houses over the decade or so now before getting into multifamily, and that's where a lot of people start, and there really are a lot of ways to get that property. Now, I'm going to tell you here in a moment why. And next week, I'm going to tell you how. Okay, we're going to talk a little bit about what we're looking for and how we get there. So be sure to tune in next week. But why real estate? Right? I gave you a little bit of an idea just a moment ago ahead of the break. We're focused squarely on residential rental real estate, houses and apartments, not RV parks like the one I was in just recently. Like I said, I loved it there. It was beautiful. It was a blast. My son enjoyed it. We met great kids that he got to play with. We met great adults that we got to hang out with. A lot of activities right on, not too far from the Gulf Coast Beach there, Destin, Panama City, all that good stuff. Fun to visit, but that's not what I want to invest in. because at some point that has the risk of drying up, just like Airbnb. I'm seeing that right now. There's a glut of Airbnb properties in the market. It's going to be a problem at some point for someone if we head into a recession. I don't know, man. We've just kind of been wobbling along. Technically we were in one last year at one point, 2 quarters, right? Consecutive declines, but we just seem to be wobbling along a little bit. But if push comes to shove and we hit that recessionary point, and if it's any bit deep, what's going to happen to those Airbnbs? What's going to happen to some of that other discretionary type stuff out there? Storage units. Well, I can't afford this anymore. I'm just going to sell my stuff, make some extra change, and stop that monthly payment. But I'm going to stay in my apartment. I'm going to stay in my house. So that's one of the big whys why we focus on residential specifically. The other thing that I want you to understand is when we're talking about getting to retirement, when we're talking about getting to retirement, not by saving, but rather by creating cash flows, real estate really is the best way to do it. Why? Because we make money 5 ways. On our houses, 5 ways, 6 on our apartments. I'm serious. Multiple ways. Think about your current investments. Think about your savings. Yeah, I know interest rates have gone up. I think one of my holding accounts now is paying me, what did they say, 4%, something like that. They are increasing. That's great for holding. But that's not a long-term investment. That's not going to get you there. That's one way. A little bit of a payout here. Typically what you're doing, you're investing in something and you're hoping for appreciation, or you're waiting for some form of dividend or, dividends on your stocks, maybe some sort of bond yield at the end of a period. But most commonly appreciation. We're going to put our money in that 401k and hope the values go up. We're going to put our money in some stock and hope the values go up. We're going to put our money in gold. Yes, gold did go up recently, very strongly, oil as well. But that's all it does. It gains in value, which on my balance sheet looks great. That's good, but there's no cash flow. I'm not actually making any money until I divest and sell that asset. Bitcoin, same thing. Waiting for it to go up in value. And what does it do? It drops massively as well. So these things are all over the place. And I'm just simply for that appreciation, which the bottom line is there is no bottom line for you until you divest that and get that cash. With our houses, we're making money 5 different ways. If I buy a rental house, I'm going to do something. I'm going to find one that's distressed first and foremost, and I'm going to get it for a discount. And I'm going to go in and fix that house up. Let's say I find a house that I can buy for $100,000 and it needs $50K in work. That's about normal numbers for these days. $150K all in, a little bit of closing costs, let's call it $160. And if my value when I'm done is $200, I've just created a $40K equity spread. We call that equity capture. I've already made money right there. Now the way we buy, you might be thinking, okay, $100K purchase price, 20% down, that's $20K plus $50K in rehab, that's $70K plus closing costs. Well, that's $80K out of pocket. That's not how we buy. That's not how the model at Lifestyles Unlimited is different. We use creative financing. We use hard money to fulfill this process. And that keeps my out-of-pocket very, very low. We're not going to go into the hard money conversation today. We might dip our toes a little bit into that next week, but it allows us to be, in this example, I might have about $10K out of pocket. With the hard money lenders that I know, financing at 75% of that projected after repair value of $200K. So they're lending me $150K. That covers my purchase and my rehab. I just bring the closing costs to the table, even with 2 closings, to refinance out of that on the back end. Then I'm 10, 12, 15K out of pocket. I'm creating 40K on the back end. I'm more than doubling my money. That's equity capture. Now, over time, what are we going to do? This is a residential rental property. We're going to rent that to a great family. We're going to go in and fix everything up first so that we can achieve that value. Best product, best price is the motto that we follow at Lifestyles Unlimited. So we're going to fix everything that's broken now or could break in the next handful of years. We're going to put a wonderful product on the market. And I will tell you that people are going to beat down your door to get into that property. I have literally had people pull up outside of my house as I'm putting that for rent sign in the yard and say, I've got money, I'm ready. Say, okay, well, let's have a conversation, see if you fit. But people will beat down your door to get into that property. So what do you have now? You have a great family. You do your proper background checks and screening, etc. Get a good lease together. And now you're collecting monthly rent. You're paying that mortgage out of that rent every month, paying down a little bit of that note every month. That's equity buildup. You're paying your fixed costs, the principal, interest, taxes, and insurance. You've done all the rehab, all the repairs up front, so you have little to no maintenance if you've done it right. So your cash flow at the end of the day is your gross rent net of that PITI, principal, interest, taxes, and insurance. You might be netting anywhere with these days right now with interest rates where they are. We see anywhere from $200 to, I still see even $600 monthly cash flow projections on houses. That's on one house. Okay. So we've got our equity capture, $40K out the gate in this example. We've got our equity build up as the resident pays down that mortgage for us. That might be $150, $200, $250 a month. We've got our cash flow. That gold's not giving you any cash flow. That Bitcoin, not giving you any cash flow. Those stocks, no cash flow. If you're in your 401k, you certainly don't get to take that money out without penalty or maybe a loan. No cash flow. But we've got cash flow here. And then over time, we will see market appreciation. We know over the last decade, unless you were under a rock, you know we've had tremendous appreciation just across the nation. It may flatten out a little bit right now, and in some markets we even hear about some declines on the coasts. Some of those more volatile swing markets, California comes to mind. Texas, a solid market in the Sun Belt. I think we'll still see some appreciation. Historically in Texas, just so you know, it's anywhere from 3, 4, maybe 5%. If we move back into that base from, what was it, in Austin 2 years ago, 30% appreciation in 1 year, I can take 5%. On that 200K house, that means next year it's worth 210. I've just made another 10K by simply holding that house, collecting those rents, looking at my equity build up, and watching that equity capture sit for a little bit longer on my balance sheet until I sell. With houses, we make money 5 ways. I talked about that. With our apartments, we're going to throw in a 6th way, because the way an apartment is valued is different than those houses. With an apartment, it is totally different. It is cash flow based. And if I can increase that cash flow, I can really drive that value up. And if I'm putting debt on that property, I magnify the effects of that increased cash flow even more so. We call that forced appreciation. And that may mean going in and just simply, we look at, I'm invested in a number of multifamily investments now as a passive. And as I look at the business plan of the investor, I look at a lot that I haven't invested in as well. And I see a common theme. There are a lot of mom and pop multifamily investors out there that are maybe afraid. I don't know what they're thinking, or just lazy, don't operate well. Maybe it's across the country and they're not very hands-on or don't have a good management company, but their rents are $100, $200, maybe even $300 or $400 below market. That's a very easy fix. Just like with our houses, we're typically looking at some level of deferred maintenance. We'll go in, we'll fix that up, that community. We may upgrade some number of the units in that community, and again, be able to then drive rent higher. We'll drive more people into the property. Sometimes there's very, very high vacancy because, again, of mismanagement. I'm in an investment right now. I just got the monthly report from the lead investor. We are now at 100% occupancy. Just hit it because they've been doing a great job going in, renovating these units. So we're seeing those dividends on both our houses on a monthly basis and with our apartments once they're stabilized on a quarterly basis. The cash flow is the key here. If you think back to what we talked about with retirement and you're saving and you're trying to build this pile of gold, and you get to retirement, you say, all right, I'm done. I'm going to quit working now. I sure hope my pile of gold lasts. Well, we don't have that problem with our cash flow. Does it suddenly stop? No, it keeps coming in. And we can continue to grow that by investing more. Now, you need to think about, when is your destination? When do you want to get there? What's it going to take to get you there? If it's houses, how many houses do you need to bring in or to acquire in order to bring in the cash flow to offset your expenses or to offset your income? We'll talk a little bit about that next week. So again, be sure to tune in. Now, I want to go back to something I said. I've become real estate retired. I'm traveling the country with my family right now in the RV bunker. Doesn't matter where, doesn't matter when. Show up at this state park, go to the next one, go to the RV park, spend some time at the beach. But how did I do it? Again, we'll talk a little bit about that next week. But one thing I want you to understand is I did not do it alone. I did not do it just myself and my wife. It was not just the two of us. We had help along the way. And this is very important. This is what I want you to take away today. Once you decide that this alternative path, this path to becoming real estate retired is the one for you, creating passive cash flow rather than a pile of gold, well, I want you to understand that once you decide on that path, you will absolutely want to surround yourself with the people that will help you succeed. There are people that can help you stay focused. It's very easy. It's very easy. Here, I've got a 6-year-old running around right now outside of the RV bunker. It's very easy to become distracted. You need someone to help you stay focused and on the path. This includes a wide array of people, including mentors. We have Lifestyles Unlimited is an education and mentoring group organization, and we have mentors to teach you, to help you when you need some handholding, if you have a question, encountered something new. So it includes mentors. It includes a good peer group or network to support you and inspire you. A team that includes everyone we need for for this business. That's general contractors, electricians, handyman, your insurance agent, mortgage broker, etc. The list is very, very long. But you want people on your team. This is the important thing as well, that have the same roadmap, that understand your destination and how to get there. Okay? And speaking of team, this is where I've got to brag on the Lifestyles Unlimited Realty team. Since you are in the process of building your team, don't you want to populate it with winners? Yeah, I think you do. Boy, and we have a winning team at Lifestyles Unlimited. I just saw a message, in fact, from the sales manager of the Houston office. Get this. We've got 3, we're going to focus on the single family side first. We've got 3 Lifestyles Realty agents that are nominated to be in the top 25 for all of Houston. They're going to be recognized by the Houston Business Journal. Now, this is just the nomination list, so this is not finalized. But I'll tell you, these same agents have been on this list in the final group multiple times. Moon Kim, he was number 1 twice, number 2 twice, number 3 one time, and number 6. He's been in that top 25 list 7 times. This is one of our realty team down in Houston, Moon Kim. Who else do we have? John Johnson. He's been in there twice. In fact, John Johnson helped me buy my last 2 houses. Guess what? I helped contribute. Well, I feel good about that, I suppose, but great news. And then we have Jennifer McCormick, also multiple winner. She's appeared a number of times in the Houston Business Journal Awards as well. So these are all members of the Houston Association of Realtors. Moon, Jennifer, and John doing tremendously. Now, if you're out there wanting to buy houses to create that cash flow to get to retirement, right, to become financially free, don't you want these guys on your team? Yeah, and we have great realty team members in Dallas, in Atlanta, Georgia, all across Georgia buying right now. We have members, in fact, from Hawaii buying in Georgia, from Texas buying in Georgia. Great market, great realty team. Same in Tennessee, same in Arizona. And that's the single family side. What about multifamily side? If you're more interested in being an apartment investor, whether you want to syndicate or like I, be a passive investor, don't you want to have a winner on that team as well? Well, guess what? We have winners on that team as well. It recently came out, the CoStar Power Broker Award. Lifestyles Realty Advisors, which does the multifamily side as well, they were one of those CoStar Power Broker Award winners, the whole team. But not just the team, very specifically, again, out of Houston, Diane O'Brien was one of the top sales brokers, again, receiving that Power Broker Award. So we have winners on the single family side as well as on the multifamily space. And again, you're a passive investor, Andy. Does that matter? Yeah, it does. I want to see that we have people that are bringing the lead investors that are putting these syndications together that I want to participate in as a passive. I want to see that we have people bringing them the investment opportunities that they need to then offer me in return those passive investments. Why is that important for me? Well, I love the houses. They create cash flow very quickly. And as I mentioned a moment ago, one of our passive investments in apartments is getting ready to kick off some cash as well. So we want to see that they have the ability to put these things together. And with a team like this, you want to have mentors on your side. You want to have a good peer network. You want to have great contractors. You want to have a great insurance and mortgage brokers on your team. But you absolutely need to have somebody that's able to source these properties for you as well. And again, big shout out to the Houston team, both on the single family and on the multifamily side. Tremendous news. That means we're doing huge volume. So if you want to get into the space as an investor in houses, as an investor in apartments, whether active or passive, clearly we've got the winning team there. If you want to get on the road to retirement, get off of that road that may get you there someday or may not. If you want to get on the road to retirement, become financially free, create the cash flow, the passive income that will get you there, check out Lifestyles Unlimited. Go to lifestylesunlimited.com. Again, you can catch this show, many others there on the radio tab. While you're there, register for our free workshop to learn more about what we do. All right, we talked already about how we make money. We'll get into that a little bit, into our philosophy, see if this is a good fit for you. And if it is, hey, great, get on that road to financial freedom with us. I thank you for listening today. You have a great day.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.